On this channel, we talk about what everybody else is talking about as it pertains to real estate. All right. Thank you so much, LaShawn, for being here. So, Real Estate Relatives, today we have a very special guest. You're going to be seeing her on this channel quite often because we got some good things planned. But I want to give her the opportunity to introduce herself. Take it away.
All right. Well, my name is LaShawn Fontenot. I am with Odyssey Mortgage. I am a residential mortgage loan officer. Been in the business for over 20 years, and Daphne and I have been working together for a few years. So I'm looking forward to this interview and what else we have in store for you guys.
Thank you so much again for doing this. We really appreciate it. And we wanted to just make sure we brought in a subject matter expert, and nobody fits the bill more than you. So again, thank you for that. Well, we're going to go ahead and tell the viewers what we're going to be talking about. We value their time, so we just want them to know what they're going to be getting in this video. So in this video, we're going to be discussing general misconceptions about mortgage. We're going to talk about the Fed interest rate reductions, things home buyers should know, and personal finance considerations, all as they pertain to mortgages. So we're going to jump start it. And LaShawn, I'd like you to take it away by answering what are the most common misconceptions that home buyers have about getting a mortgage?
The biggest misconception that I hear a lot from first-time home buyers is that they think they need 20% down and that they need perfect credit. And so I had a friend call me this week. She's moving back to Texas and thought she needed 20% down to purchase. And so you don't. The minimum down payment for an FHA loan is 3.5%. And the minimum down for a conventional loan is 3% if you're a first time home buyer, 5% if you're not. And then for my veterans out there, 100% financing for them.
Can we throw in any information about USDA? Because I know that in a lot of the areas that we service in Brazoria County, a lot of them fall under the USDA.
Absolutely. And with USDA, that's 100% financing also. They have some guidelines to their loan for you to qualify, but we can discuss that once a client is in the pre-approval stage to see if they qualify for the USDA loans. But it must be in a rural area.
What are some factors that determine a buyer's mortgage rate?
So your credit score is going to be one of the biggest determining factors of your mortgage rate. The higher the credit score, the lower the interest rate. The lower the credit score, the higher the interest rate. And so you can use that rule of thumb.
Seesaw is what I was thinking.
Yes, yes, yes.
So how can a buyer improve their chances of getting approved for a mortgage?
So I would suggest taking a look at your credit. You can go to annualcreditreport.com, pull your credit report to see what's on your credit. So most people don't take a look at their credit. There are a lot of free apps out there. There's Credit Karma. You can log into create your account with Experian.com, with Equifax and TransUnion to pull your credit report. And I do know that Experian will offer you your credit score, and so will Equifax. Not sure about TransUnion, but that's a good place to start.
Okay, you get those free once a year.
Yes.
We know this week the Fed reduced the rates. And so in this portion of the video, we want to talk about what all that means for a buyer. So how does a reduction in the Fed's interest rate impact mortgage rates?
So the biggest misconception about the Feds reducing rates is that mortgage rates are going to go down. It's not true. So leading up to this anticipation of the Feds cutting rates, mortgage rates had already started coming down over the past month. And so when Feds cut rates this week, that's consumer rates, car loans, credit cards, home equity lines of credit, um, even variable rate mortgages like adjustable rates. You'll see those things go down. But when it comes to mortgages, no.
That's so good, such good information, because again, that is a huge misconception that, oh, and we see people, we've seen it online all this week. It's time, the rates are down, the rates are down.
Right. And the rates have been down for the past month. Yeah. So, you should have been applying then.
Right. So is it a good time to refinance now, that we are seeing and have started to see within the last month rates come down?
So last year we had a lot of people close on homes with higher interest rates, in the sevens and the eights. And so now is a good time for those people to refinance because the rates are in the low sixes for conventional, and then they're in the mid fives, high sixes, I mean low sixes for FHA. So now is a good time for those people to refinance. And then for those who are wanting to, they have a lot of debt and want to pay off their debt, you can do a cash out refinance. Roll that debt into your mortgage and clear off your debt.
Which will then help your credit scores.
Exactly.
All right. So you mentioned it a little bit previously, but what's the difference between a fixed rate and an adjustable rate mortgage in a low interest rate environment?
So a fixed rate is exactly what it is. It's going to be fixed for the duration of the loan. It will not change. Even if your mortgage is transferred, it will not change. Now, an adjustable rate mortgage adjusts upon the time that it's supposed to change. So if you have a 3 year or 5 year or 7 year arm, that means it's fixed for 3 years and will adjust after the third year. 5 years, it's fixed for 5 years and will adjust thereafter, and so on.
So now we're going to move on to the section of things home buyers should know. Okay.
Okay.
So what should home buyers expect during the mortgage approval process?
So during the pre-approval process, you'll get the application to fill out. Upon receiving that application, I personally will contact you, go over your application. We're going to fill in any missing spots on the application. We're going to go over your employment history. I'll do a soft pull, take a look at your credit, and then I'll ask you to provide me with your pay stubs and W-2 so that I can verify your income. Once I have that information, I'm able to let you know exactly how much home you can afford.
Okay. So let's talk a little bit about some of the hidden costs of buying a home. So they're not really hidden because we know that it's all just
Right.
things that people don't really think about that come along with purchasing. What,
So, so a lot of buyers are not educated, but I know your buyers are. But sometimes I get buyers who don't know that your upfront costs, you have earnest money, you have an appraisal fee, you may have a loan application fee or credit report fee, inspection fees. So those things are required up front, and first time home buyers are like, oh, really? I have to have all this? Yes, yes, that's unfortunately, yes. And these are third party fees that have to be paid up front.
now let's talk about mortgage insurance. So what is it and when is it required?
So, PMI, private mortgage insurance, is required when you are putting down less than 20%. So, that private mortgage insurance is there to protect the bank if you default on your loan. So, for a conventional loan, when your loan to value reaches 80% or less, then you can have the mortgage insurance removed from your loan. So if you're putting down a minimum of 5%, you'll get an amortization schedule that'll show you that if you pay that mortgage consistently over the next several years, it'll show you that in X amount of years that mortgage insurance will fall off. Well, it won't fall off, but you will no longer be paying it, and then you'll request that it be removed. But for an FHA loan, a lot of buyers don't know this, is that the mortgage insurance is for the life of the loan. It's not a bad loan. It's just that that FHA loan help a lot of first time home buyers get into their home with 3.5% down, right? You can always refinance down the road to a conventional loan so that when it's time for the mortgage insurance to fall off, it can be removed.
What happens when a buyer is under contract, but the interest rates go up and they're already locked in to their mortgage rate?
That buyer is safe. So as long as their loan is already locked, they're safe. So they have no worries. But if they're under contract and their loan have not been locked, then they're in a bad spot because interest rates change daily throughout the day. And so it's basically like gambling. You basically play in the market, waiting to see what's going to happen. But for the person that's already locked in and rates go up, they're good.
And will a buyer know that they're locked in?
Yes, it's our job to contact the buyer to let them know, hey, now is the time to lock in. The rates are this amount today, and they are looking like they're going to trend up in the next couple of days. So we need to get locked in. So we keep our buyers informed.
Now, there are a lot of buyers who have finally said, you know what? Said the interest rates have gone down. I'm going to get off the sidelines. But there are still those that expect to see interest rates, wishful thinking, what they were during COVID. We know that that's not likely to happen. But is it better for those people to buy now or wait to see if the interest rates will drop more?
It's better for them to buy now, and I'll tell you why. Home prices are low. There's a lot of inventory on the market. This is a buyer's market right now. And so they can get the price they want. You as their agent can ensure that, you can get some seller contribution for them, means less money out of pocket. And of course, rates are higher than they were 3 years ago. But in a few years, when rates go down, you'll still have that lower mortgage and you'll be able to refinance to a lower interest rate, which will in turn lower your payment.
So now let's transition to the next section that we're going to be talking about, which is personal finance considerations.
Okay.
Talk about what, again, what everybody on this channel, we talk about what everybody else is talking about as it pertains to real estate. We know a part of that is for most people student loans.
Yes.
So how can student loans impact a buyer's ability to qualify for a mortgage?
Student loans is a huge issue. So with student loans, people are under the misconception that we don't count them because you're in deferment or forbearance. And that is not the case. So FHA and conventional have their guidelines regarding student loans, and each one is different. If you are not on a repayment agreement with them, then we have to count a percentage of your student loans as a payment. If you have a repayment agreement, even though that repayment agreement may not even start for a year, we can use that repayment agreement, which always work out for the buyer. So say you owe $50,000 in student loans. And with conventional, we have to count 1%. That's $500, right? But if you have a repayment agreement letter from your student loan company and they say that your payment is only going to be 175 when you start repaying, we will use that 175.
So that helps in terms of determining a buyer's debt, right? Debt to income.
Correct. Correct.
Good deal. All right. What is the most important thing that home buyers should do before applying for a mortgage?
I personally think that before they apply, they need to look at their credit because that's the most important thing. Look at your credit, see where your scores are, see if you have high debt, any collections. And then the second thing is making sure you have money because you're going to need that money to close with. And so that can be in the form of savings, checking, 401k, anything like that. Money market accounts, IRAs, where are your funds and where are those funds going to come from?
Identifying that.
Yes.
All right. So one of the main questions, and I normally get this from a lot of first-time home buyers that come to me, they don't know how much home they can afford. So how can you help a buyer determine how much house they can afford?
So this goes back to us doing the pre-approval process. So when they apply, I'm going to find out what their gross income is, right? And so we're going to take that gross income and their debt. That tells me what their front end ratio, debt to income ratio is. And then once I take that income along with their debt and their potential home price, their mortgage, that gives me their back end ratio. And that tells me, what that will be. And so that's how we determine that.
All right. Good deal. Good to know. So while we're talking about income, growth, and all that, let's move into employment. So, what role does employment history play in qualifying for a mortgage? And then, while I have you there, it's two part.
Okay.
Talk about individuals that are graduating from school and they don't want to enter the workforce as a renter; they want to buy. So, can you touch on both of those for me?
Absolutely. So your employment history for those that are already in the workforce, you need a 2-year employment history. And so that needs to be in the same line of work. Um, and then for my graduates that are newly coming into the workforce, we can take their diploma, copy of their diploma, verify when they graduated, and then take their newly employment letter saying, hey, they're going to start working here, and they can actually close on a brand new home just by having that degree and that employment letter.
We were just speaking of W-2 employees. Let's
Yes.
someone who earns income and they're 1099 earner. How can you help them and what loan options are available to them?
So anyone that's 1099 or self-employed, um, if you have been self-employed for 5 years, I only need to verify 1 year of income. As long as you can prove you've been self-employed for 5 years, right? If you've been self-employed for less than 5 years, I need 2 years of tax returns. Now, sometimes a lot with my self-employed earners, they write off everything on their taxes. So that hurts them. And so our other option is to do a bank statement loan. We can get 12 months of bank statements to show your gross deposits into your bank account, and we average those out. There's a formula that we use to come up with your income. The minimum down payment for the bank statement loan will be 10%, but you can still get in a home.
What are some common mistakes that you see home buyers make as they're applying for a mortgage?
So some of the biggest mistakes we've seen is going out and making big purchases right before you apply or during the process. We've had people go out and buy a car, buy furniture, and furniture is like one of the biggest things because they're anticipating getting this home and they think they can just go out and buy the furniture. No, you cannot. So, I try to uh, um, teach them, look, during this process, do not buy anything that's going to harm your credit or harm your chances of closing. So the goal is to get you closed. That means all your credit cards are off limits. Just don't make any large purchases because we've all had an incident or two in this business with clients doing that.
Sure. And
Yeah,
I know we both kind of preach the same thing. It's, house before the car. Some people get itchy about, oh, I got a new house now, I want a car. Or, do the house first, get the house first, and then get the car. Right. I
correct.
do want to give you the stage to highlight anything that I may have neglected to ask you about that a home buyer would need to know or things that would impact um, the mortgage approval process for a home buyer.
I think we've pretty much touched on everything. We've touched on a lot. Now, there are some things in our conversation that can make for another interview, especially talking about the personal finances or the pre-approval process itself. We can definitely do that in another segment.
Okay, perfect, perfect. And I do want to give you an opportunity to leave all of your contact information. Again, I'm going to leave all that in the description of this video. But before I ask you to give your information, can you tell us how soon a potential buyer can receive a pre-approval letter working with you?
Well, when they're working with me, they can have their pre-approval the same day.
Go ahead and leave your contact information for anyone that has any questions and anyone that's looking for a lender.
Thank you, Daphne, and I appreciate you having me. My phone number is 281-781 4145. My email is lashawn@lashaunotems.com, LASHAUN@LASHAUNOTEMS.com. Daphne's going to have that information right here at the bottom.
Once again, thank you so much. We know that you're a busy woman and we know that this information is needed and we want to make sure we got the best person to be able to give some good information to buyers who are ready to buy or thinking about buying. So
Thank you so much.
that was LaShawn. We want you to remember that for all of your real estate needs, the homegirls are always ready and willing to enable you to find your way. Until next time, bye-bye.
Here is all of LaShawn's contact information. To apply for a mortgage, just scan her QR code. Here are some other videos on our channel that we think you would find valuable. Don't forget to like and subscribe, and we will see you in the next video.